Sonali, we've known that deal activity has been incredibly slow. We're mired in this slump, but it's ultimately impacting the workforce of the street.
It certainly is. And you saw a lot of massive layoffs happen at the biggest of the banks, which have gotten very, very bloated over the last several years, where not only M&A was hot, but so was underwriting. And so was underwriting tied to both IPOs and debt underwriting. Now, when you take a look at it, it's really been since the end of last year that we took a look at all the smaller banks, boutique banks, European banks, that were looking at the turmoil kind of coming across the industry, whether that was the likes of Credit Suisse that was starting to shed jobs at that time, or even Goldman that announced thousands of headcount reductions here, that you saw boutiques and other European banks say, okay, maybe this is the time to gain share because this is when we can buy bankers for a better price because the market had softened pretty significantly. So you did see this huge pitch come from the boutique banks, by the way, many of them report earnings this week, to go to those bankers and say you could have a bigger job at a firm like ours. You can keep more of your paycheck because when you look at all these very large banks, they're paying across the whole bank. So you might not be getting as much of a share of what you bring into the business. And even for the junior bankers here as well, there's this idea that, hey, come to a smaller firm. Come to a firm where we're building things out. Maybe you can advance more quickly here than you would at one of those big firms.
Have we seen that translate just not only in headcount, Sonali, but in actual performance of these banks? Are they starting yet to take some market share?
Well, what's fascinating is if you look at the league tables, if you take a look at it, it's actually a very big change that you're seeing this year, not only among kind of the medium-term banks, but even the biggest banks. The top three banks this far in the year, you're seeing Bank of America come in the third spot here. I wonder if this means that more smaller deals are coming back, and Bank of America, Goldman, JP Morgan, they've invested very heavily in those kind of middle-sized deals because the biggest of the big have a lot of regulatory concerns. Perhaps they have not been announced yet with macroeconomic uncertainties. But certainly you do see the likes of, for example, Mizuho being in the top 10 right now this year. They had their own deal where they acquired Greenhill as well. And we're wondering if we see more investment banking kind of deals or carve-outs of teams. Centerview is way up in the league tables, and we have seen them gain a lot of share over time. Of the big deals that have been announced, we have seen Centerview have a very significant role. Not pictured in the league tables is the restructuring activity. And you do see a lot of these banks also being, bulking up on the work they're doing because bankruptcies are ticking higher and companies are looking to restructure their debt loads. So it'll be interesting come end of the year to see where the money is being made now that we know that this year is kind of a wash. When it comes to mergers and acquisitions, much lower than prior years. And there hasn't yet been a return of those really big deals, even for private equity, with executives saying you might not see them again until next year at scale.